Hey everyone, this is Ken here from Invincible Investor, where we help beginners gain confidence in investing so that they can achieve their financial dreams and escape the rat race. Many ask, what do I exactly do on a day-to-day basis on active investing? One of the way I do active investing is to select an individual company and I do a deep research on the company. During the coronavirus pandemic, I spotted this company and I invested in this company and gained a 30% return over a period of less than 2 months. At the time, this company is trading at a super low valuation and it gives a very good dividend yield. More than just showing you that this company is undervalued, what I want to share with you is the thought process that goes through when I evaluate this company. I compile this company and share with my private chat group, and today I want to release it to share with you to understand exactly what is my thought process when I review a certain companies. This methodology or the method of understanding the companies can be used to evaluate whether the company is listed in Malaysia, which is under the Bursa Malaysia Stock Exchange, or whether it is listed in New York Stock Exchange or the Nasdaq, or any company in the world. You could use the same methodology to evaluate the companies. In particular, for this company, I use this valuation method called the X-Cash PE ratio. And it is of course only suitable for company with a net cash position. I will explain further detail in the video, and I'll let you have a chance to watch it right now, and I will see you after the video. Thank you very much.
Alright, hi everyone, my name is Ken, and today I will be talking about how to invest using the 5M concept of investing. And the 5M are, the first one is the mindset. I think the mindset is one of the most important part of being a successful investor. The mindset comprises the principles that we use in investing, the psychology and the habit of investing. As you know, 80% of success is come out from the mindset itself. So I think the mindset is one of the most important part. The other part, the 20%, the remaining 20% is what I call the mechanics of it. The mechanics of it are like the management, the mode, and the business model. That's when you're evaluating a company, you want to know whether the management, what is the management integrity, the leadership of the management, is the management interest aligned with the investor, and whether the company have a mode, have a competitive advantage where they prevent other competitors to eat up their pie. So I think that's very important. And also the business model, whether the business model works or not in today's world. The third part, the third M, is the mathematics, which we will evaluate the past, present, and future. This one is more on the financial side. The fourth is the managing the risks. What are the risks that the company faces and what you can do when you are incorporating this company in your portfolio? What kind of diversification, what kind of position sizing you're going to have in your portfolio of this particular company. The last but not least is the market. The market, as I define here in things like you can look at the price action of the stock to see when you want to enter the stocks, so that it will give you the lower risk. Whether you want to follow the trend, you want to do a dollar cost averaging, you want to follow certain indicators, and understanding the cycles of the economy and the cycle of the market, the strategy that you're going to employ in each different market, whether it's when it's a bear market, the bull market, or when it is trading sideways, what is a strategy that you want to employ. And of course, we also touch a bit on the macro and the microeconomics and the market behavior through all different phases. So these are the summary of the 5M concept of investing. So as in any of this research that I've done is mainly my own research. I am not an independent financial advisor. Please read the disclaimer. This whatever that I shown here is not a recommendation to buy or sell. It's basically my own research, and you yourself make your own decision, and you are comfortable with your risk, then you make your own financial decision. I am not a financial advisor. I only invest my own money, and also I invest for one of the private companies that I have a certain amount of shares in, which I also invest for the private companies as well. So these are all the risks that you encounter if you invest in any shares. In there's an element of risk. Share price can go up, can go down, And whatever it is, worst case scenario, a company can go bankrupt and you lose every single thing. So you might lose all of your investment. Okay, so let's move on. Let's see what are the two companies. Today I will share with you two companies that based on my research, one of them I will invest, one of them I won't invest. And I will just want to tell you at a very high level how I do this evaluation. Okay, the company that I'm talking about is Lihan Industri Berhad. This is a stock listed in the Bursa Malaysia and the main board in Bursa Malaysia. This company was incorporated in 1994. So this company has been there for quite a long time, which means this company have gone through 1997, which is the Asian financial crisis. They have gone through year 2000 during the dot-com bubble. They have gone through 2008, which is during the 2008, which is the year the global financial crisis. So this company have gone through several black swan event, so-called black swan event, or a several big dip in the market where the whole economy go through a recession, and yet this company is able to remain profitable for the last 10 years or so. Every single year it's making profit. Some years is lesser, some year is more, but every single year it is still profitable despite all the recessions that happen in Malaysia and all around the world. And of course, the price, in the economic outlook as a general, where there is a price war in oil, it affects the oil prices, and many raw material prices also changes in. But this company has also been able to remain profitable, even all the price war on oil that's happening between Russia and Saudi. So let us evaluate this company. So I use a paid subscription, and these are the data that I received from the subscription. This is based on yesterday, which is April the 9th. Closing, the company closed at 193. The market cap is 347 million ringgit Malaysia. What does this mean? This means this company is below 1 billion market cap in Malaysia, which also means this company fall under a small cap category. And if you look at this daily volume, it is 310 now. When I look at this, I want to know how big a position I want to be in this company. Or any investor who have a big portfolio, you want to be careful because you don't want to be because this company is not so liquid. If anything happens, you want to get out, you also cannot get out in time. You have to slowly sell it off to a few days period. So these are small cap company is not unless you are a portfolio manager, then you know how to slowly get out. But if not, then just be careful. Just don't put too much because the company is not as liquid as it is. Compared to shares in America or in the S&P 500, the shares over there are very liquid, which means there is millions and millions transacted for each company in US dollar. So for individual investor, it's very easy to go in and out of this company. This company is an investment holding company that manufactures and sells furniture. What I like about this company, I particularly favored company with high dividend yield, and this company have a dividend yield of 8.12% at the current price, which I think is a super amazing. Of course, the dividend that is going to pay out might reduce this year because of the COVID-19, which all the demands around the world will come down, and this company will be affected. Definitely, this company will be affected. But whether is the effect is a one-off effect, or whether is it going to continue for the foreseeable future, and whether this company have the strength to withhold in the foreseeable future. And that's what we are trying to evaluate in this company. The company right now is trading at a PE of 5.3 times, which in the marketplace for this type of company trading at 5.3 is considered cheap. It's actually very cheap. In fact, I will show you a financial ratio called the X cash financial ratio, which you know that this company is actually trading way below 5.3. And let's move on. Okay, Lihan is an investment holding company that manufactures and sells furniture. The company operates through furniture manufacturing, three divisions: furniture manufacturing, plantation, and other segment. The plantation and other segment we can disregard because most of the income come from the furniture manufacturing. It provides office and residential furniture, so both are commercial and residential, to three parties: furniture importers, wholesaler, and retailer. And 97% of this company sales are through exports, which means only 3% are sold locally in Malaysia. So this company actually have a huge, relatively huge network of people in all around the world trying to sell. They have customer in all around the world. So that's one of the good thing about this company, because it's not a local, they have a foreign exposure. The company produce ascent chairs, tables, bedroom, coffee, dining, entertainment, and so on and so forth. You can read from here. It also involved in property investment activities, such as drying of rubber wood, timber wood. These are relatively small portion of their overall operation. Lihan has operation in Malaysia. Actually, they operate the main location, or the main investment property, or the land that they have is mostly in Johor, Muar, Johor, and they operate in the US because they sell to customer in US, Canada, Middle East, Asia market, Africa, Latin America, Europe, and Australia. As it says here, the company is based in Muar, Johor, Malaysia. It's a subsidiary of Asset Muar Sdn Bhd. Okay, this company you can see around here, these are all the cabinets that the company developed. They have a lot of machines, high technology, state-of-art machines. And if you can look around here, you will know this company is a labor-intensive company. This company have about 2,880 workers around the range, over 2,000 workers, 2,800 workers. And this is a design team. Okay, they have all these machineries. So when during the COVID-19, would this company be affected? Definitely yes, because they have to stop operation. I'm not sure whether this one is exempted or not, but yeah, it will be affected one way or another. Okay, these are the product they sell. All these bed set. If you can look at all these product itself, you know they are serving the middle to high-end market. They are not serving the low-end market. They are serving the middle to high-end market. Okay, these are the sofa set that they have. Yes, most of them are export overseas. Okay, these are the 4 factory, office, and showroom that you can see over here. These are the 4, and these are all the factories. You can see this company has been solid now. It has been there since 1994, and they have property where they own themselves. Most of them are freehold land. I think there's one or two property I forgot, but one or two property are leasehold. But most of the properties are are freehold land, so they own the property. So this company have property, and they also own the property as well. So very good. The other thing is the revenue segment. So, and I want to know what is the exposure that they have. So they have exposure in America. America here refers to Canada and US. 78 to 79% of their sales are to US, which is United States of America, and also Canada. 18% to Asian countries, a small percent, 3% to 4% in Malaysia, and the rest of the world. Okay. So who are the management? The management of the company is this person called Chua Yong Hop, and this Chua Yong Hop is actually Chua Lee Sing is the chairman of the company. Chua Yong Hop is the nephew of Chua Lee Sing. There's a relationship here. These two have a relationship. So this company is owned by Asset Muar Sdn Bhd. Needless to say, this Asset Muar Sdn Bhd is owned by the Chua's family, okay, which own 42%. I believe through all the other strategic holding, they own more than 50% of this company. Therefore, they control this company. What does this mean? When the family business is controlled by where the family members control the business, which means they have all the intention to make sure that this business survive, or if not thrive, if the executive have no interest in the company, then it is not aligned with the shareholder. So being a majority shareholder of this company is also good as well, because being a majority shareholder, they have in their past proven that they have continuously pay out dividend. So it is not a company where they have a majority shareholder where they make money and they keep all the money through themselves. No, this company actually have consistently for the last many years. Every single year they declare more than 30%, roughly around 30 to 40% of their profit to the shareholders. So this proves that their interests are aligned with the shareholders. Which is why the dividend is so high at around 8% currently. Okay, one of the things to note is when I look at the management, I want to see the management face so that I know who this person are, right? That I bought into this company, who are the person running it. Surprisingly, I look around, I couldn't find Mr. Chua Yong Hop's face. Maybe is a maybe he is a I don't know. I don't know. Even in July 2006, Focus Malaysia featured the 10 fastest growing companies, which they look down all these, put in all these faces, and the Lihan industry is here. Even Focus Malaysia couldn't find the face of Mr. Choi Yong Hap, who actually run this business. So I do not know why the maybe is this company, this owner, or this CEO of the company is the managing director is a low profile, or no, I do not know what happened, but I couldn't find this the picture of this owner. So there are only two reasons. There are only two reasons. One of the reasons is because this person is media, try to be a low profile. They try to keep everything out of the social media, or could be another reason is there is something to hide. Okay, actually there's a third reason. The third reason is could be they are more in the Mandarin speaking, so perhaps English speaking media won't be able to figure out who, when they took picture in the social media, they won't be able to figure out this particular person is actually Choi Yong Hap, because I believe Choi Yong Hap and also the whole family, which is in Muar Johor itself. If you look at the furniture business, more they are owned by Chinese, and also they are probably Mandarin speaking. So maybe in a Chinese newspaper, you'll be able to find the face of this person. But I just something I found very fascinating, because I couldn't find the face of the director who actually run the business. Okay, now since this is their background, Mr. Chua Lee Sing is the chairman, currently aged 69 years old. So what does it mean? This is 2008 financial statement. So currently Mr. Chua Lee Sing is about 71 years old. Mr. Choi Yong Hap, which is the main person running the business right now, is 52 in 2008. So 2020 is 54 years old. So what does this mean? Which means that the company have a succession plan. Okay, from the uncle, they pass on the business to the nephew, and the nephew can run the business at 52 years old, assuming Choi Yong Hap can work until 70 years old, which I think most people can work way past 70 years old. This business, Choi Yong Hap have extra 16 years to train the next succession plan. So I think it's a very good sign. So these are the experience you can see. Since 1994, they have been in this company, and they have been working in the furniture industry many years since 1994. So these are all seasons. They have gone through many years. He began working career as an apprentice in Sing Hing Furniture in 1981. 1981, you can imagine. All of these, they are seasoned player. I believe in Muar Johor, if you stay in Muar Johor, you probably have heard of them. Or if you are in the furniture industry, they probably are the big brothers of furniture industry in Malaysia. Okay, just one of the model we look at just now is management and the mode. The other one is we look at is the mathematics of the companies. All the mathematics of the company, we look at the past, present, and future. Today, we're going to go very high level on the past record of the companies. You can see every single year the company revenue is increasing every single year. Okay, sometimes there's a dip, that is okay, but every single year on a general trend is on an upward trend. So this is a good sign. Net income, you can see also every single year increase for the last 10 years. Some year there's a dip. As in anything, no business is foolproof. Based on economic cycles, they are up and down. As long as the general trend is on a rising trend, then it is okay. Okay, you can see right now also the profit margin is also fluctuating. One of the key things I have a concern about this company is the net profit margin is not a double digit. It is a single digit net profit margin, which range from as low as 4% here, which is 4% here, to as high as close to 12%. So average, it will be around 8%. Yeah, you can on a long-term basis, the average net profit margin of the company is around 8%. Well, yeah, it's considered okay in this industry. Okay. The income statement level is just a high level review. What is the growth rate of the revenue? You can see that every year it was increasing just now, the revenue. The 3 years CAGR growth rate of the company, the latest one is about 10%, which means the last 3 years is grew by 10% every single year. The last 5 years, it grown by 16% every single year. Operating profit also 6%, 5 years 33%, which is fantastic. The net income adjusted 3 years grow by 3% because there is a dip and then it goes back up. Yeah. And 5 years CAGR go by 28%. The longer the compounded annual growth rate of the company, the better it is. Of course, sometimes we look at the shorter term. Instead of look at 10 years, we look at a shorter term, 3 years or 5 years. We know what is currently happening with the company, which is not only the past but the present. So 3 years CAGR is actually only 3% because it was I think the income was high in financial year 17 and then it goes down and then go back up again. You can see this one negative and this one positive. You can see from here last year compared to last year, the current financial year 2019, actually there's a 44% increase in net income. There's 1 year it dip and then 1 year it goes back up. Okay, so there's a 44%, which means current result is actually very good. Financial year 2019 result, December 31st, 2019 result is actually very good at 45% growth. Balance sheet, how is this balance sheet? You can see this is the total asset. The asset keep increasing every single year. Very good. Liability, of course, generally is going to increase. Book value per share is 209, which means the company is worth $2.09. All the asset minus all the liability, the remaining thing, the company is worth $2.09. Currently, it's trading at $1.93, which is below the book value. But that is not the real reason why we buy the company. Many companies can be at below book value and yet lousy, the stock price don't perform because there might be a lot of value trap, and not book value is not a very good valuation of a company. Okay, it is very good for company which is an asset-based company, but for this company we don't use book value as a valuation tool for the company. Okay, just on a high level general explanation of the balance sheet of the company. Right now you can see the company have a short-term cash of 165 million. That's amazing, and this company have very little debt. 165 million. Just remember this number I show you. I'll look through the financial and look through accounts receivable, inventory. Nothing that is outliers. Everything looks okay. This one is a very plus point. Cash of 165 million inside the company. And let's see how many borrowings do they have. They have only borrowings about 15.3 million plus the capital lease or the current portion of the debt around this. You can see they have about 20 over million in debt. So what does this mean? What does this mean? Let me just remember those figures. I will go on explain to you what does that mean. Which means that they are in a net cash position. They have 165 million in cash and they have only about 20 over million or 30 million in debt. So if you minus off, they are in a net cash position. Cash flow statement, very amazing. This company, cash flow from operation for the last 12 months. They generated later. Yeah, they generated a cash flow from operation of 130 million in the financial year 2019. That is considered amazing. Okay, cash flow from operation. One of the key things, not only look for cash flow from operation and look for whether there's a free cash flow. And you can see from here, the company have not, the company do not spend too much on capital expenditure. There's a good or bad thing if the company is not growing, but you can see last 2 years the company did purchase some. Actually, they did purchase 3 pieces of land for expansion because of the floor space need to be more because they need to have a just movement of the stocks. So they purchased 3 pieces of land in Johor in I think financial year 2017 or 2018 around this time frame. So there is a certain level of capacity expansion in terms of the floor place. But fabulous because I see very good because the company have very little capex to grow. They need very little capex to grow the companies. You see, all of the cash flow from operation eventually is a free cash flow for them. Yeah, cash flow from operation is like everything. If for example 7-Eleven, the business model of 7-Eleven, if they generate cash every single month, and every single month they have for them to expand, they have to open another another outlet. They have to have a high capex. So this business is different. They have already set up long time ago. All existing asset is generating income, and they don't need to plow back the income in order to grow. They don't really need to put back a lot of money to grow the company. So this, I think, is a plus point, and most of the cash flow from operation is a free cash flow. So superb. Here you look at it here. This one is where I see whether the company have an aligned interest with the shareholders. If the company own majority of the company, they themselves also get dividends. If they pay out dividend, they themselves get, shareholders also get. You can see consistently over the many years, at least over the last 5 years, you can see they pay out about 27% to 40% of their income, profit after tax, as a dividend to the shareholders. So super aligned with the shareholders. Very good. Okay, now I'll just do a quick level, high level valuation of this company. The company have a short-term cash of 165 million, total debt 31 million, net cash 133 million. Okay, so this company has 133 million. The company right now at 193 is valuing the company at market cap of the company is 347 million, which means the valuation of the business itself is only 213 million. 213 million. What does this mean? This means if I sell you a wallet, this wallet is cost 347. If this wallet is cost, let's say 100, the wallet is 100. Inside there you got 20. How much do you, if you buy over the wallet and you pay the $100 to me, I give you the wallet, and inside the wallet got $20. How much is the cost of the wallet to you? 80, right? So exactly, it's the same thing. The cost of the business right now is 213 million. And if I tell you, every single year they generate 130 million in free cash flow. Every single year they generate 130 million in free cash flow. The cash flow from operation multiple is only 1.64. 1.64, which means today I put in money, I buy this company 130 million, 200 million. First year they generate 130 million, the second year they generate another 30 million. It's only 2 years I can get back my money already. So fabulous. This company is super undervalued. Okay, but this valuation of the business is not so accurate from the cash flow from operation, because if you look through the last 5 years, 10 years, this company cash flow a bit fluctuation. So it's better for me to use a yearly income. Yearly income right now is at 78. Yearly income every year they make about 78 million. Roughly this last year income 78 million. So actually the X cash PE ratio is only 2.73, which is also very undervalued. Very undervalued. 2.73. This is one of the reasons why I like this company, because it's the valuation is very attractive. Okay, is this company bulletproof? No. This company also have its own risk. The first risk is the changes in foreign currency exchange. If Malaysian ringgit depreciate, it's good for this company, because this company sell in US dollar. So they sell their furniture in US dollar, they get back US dollar, right? So if it's converted back into ringgit Malaysia, right now foreign exchange rate, Malaysia depreciate or appreciate against US dollar. As you know, Malaysia is depreciating. So actually it's good for this company. The more the ringgit Malaysia depreciate, the better it is for this company. Later I will show you a calculation that says every 5% change in the foreign exchange have 4 million positive impact in the net profit of this company. So good or bad thing, it's a double-edged sword. Today it might go up, next year it might come down. But this year, as we know, the trend is actually Malaysia is going to continue to depreciate against the US dollar, because the Bank Negara is going to continue to lower the interest rate and therefore increase the money supply in the market, and therefore ringgit Malaysia is going to continue to go down. Okay, this company has also a labor cost problem. Malaysian, because they have 2,800 over workers, and if Malaysian change the minimum wage, increase the minimum wage, the labor cost will also increase the levy that's going to pay. This is going to pose a problem for this company as well. The third is the competition from neighboring countries. A lot of furniture manufacturers right now open their factory in Vietnam, because Vietnam have a lower wage compared to Malaysia. But despite that, the Vietnam is already increasing. Okay, the managing risk number 4 is the raw material prices. This one is beyond everyone controls. Any changes in the crude oil price will also affect this company. in terms of the purchase of the raw material solid wood. But you can see this company over the years, it has a very good relationship with all the suppliers, and it has go through so many adversity, I would say. And raw material price have gone up, have gone down, have gone up, have gone down, and they are able to manage it every single year, still make profit. So while there's no guarantee whether this company can continue to make profit, but at least they have the experience to deal with this when the material price go up, high up, or going down. Customer base concentration, they have three major customers who account for about 8 to 12% of the revenue. The rest is all the small customer. Availability of workforce, as I mentioned, 2,880 employees. US-China trade war will also affect them, but I think this is actually a good thing for them. When US have a trade war against China, where they increase the import tariff, where US going to buy the furniture from? From Vietnam, from Malaysia. So I think it's a good for them. COVID-19 pandemic is going to affect this company because of the MCO Malaysian factory is going to stop work, so it's going to affect them. COVID-19 is going to affect the demand in the US, which is where most of the customers are. So if the US demand reduce, the order to this company will also be reduced. So these are the risks that's facing this company. Is this company perfect? No. Is this company good? Valuation is very attractive. Good companies, good management. They are the big boys, but there is also risk involved. So these are all the risks I think is facing this company and even facing the industry as a whole. Okay. I look at the market price of this company. One of the model that I look at is the price of the company. Generally, I look at the last 10 years, you can see, and this company go up and down, up and down, and down. But general trend is on an upward trend from here all the way until here. So now, as you know, the last a month or so, this company came down. By the way, I want to let you know, I also bought into this company. I have interest in this company, so whatever I say is a bit biased. So do not base your financial decision based on what I say, because what I say is just for educational purposes and for entertainment purposes only. I bought this company, I think when it went down, and I think around 160 something, if I'm not mistaken. But anyway, it has right now gone up to 190. It might continue to go down. I do not know, because no one knows how the COVID-19 pandemic is going to pan out. But generally, this company have an upward trend in terms of price, which is very good indicator that the value of the company increase over time. That's why the price shown itself over time. So we also need to look at the price of the company. Okay, you can see this is the foreign exchange rate. Malaysian right now is you can see last month the foreign exchange rate increased. So when the foreign exchange rate increase, will the company profit increase? Most likely, but of course, if you see, because financial year 2019 here, the exchange rate is around this region. Right now, the exchange rate is around here. Definitely, last few months, the company would be is more profitable because of the appreciation in the US dollar. If US dollar continue to hold at this level, 4.3, 4.2 level, is going to benefit this company. Here, this is from the financial statement of the company of a sensitivity test of the company. Every 5%, it says here, every 5% strengthening of the US dollar will have a 4 million impact on this company. Positive impact. So this company is I think this one would mitigate some of the lower demand from the US this year, and also the MCO period where the company will incur some cost on the worker salary. This will also help buffer the negative impact from the COVID-19. Okay, I checked the insider purchases of this company. Mr. Chua Lee Seng, which is the chairman of the company, disposed of 60,000 shares. As Warren Buffett says, there is only one reason why directors or anyone buy a shares. They buy a shares because they expect the share price to go up. But there's many reasons why people sell the shares. So they could sell it because they want to raise funds to do other things, or they want to purchase a house. We do not know. But the company selling shares at 60,000 shares at $1.90 is only about 100,000 to Mr. Chua Lee Seng itself. I think this is a very small sale. Okay, so nothing to concern about. The other thing on the peer analysis, these are all the top 11 companies that roughly matches Lihan Industries. They are in the furniture business, furniture furniture exporter business. And you can see all this is the market capitalization of all the companies, how big these companies are. The second highest market cap of this company is Sunco, which is 184, and also Latitude 3, which is one of the famous 189. Homeris is very also small, 144. So you can see the second largest is only half the size of Lihan. If Lihan is the big brother, they are the strongest one to weather the storm of the COVID-19. Who do you think can win? Who do you think can weather the storm better? Of course, the person who are the strongest. And the Lihan have a very strong balance sheet. Also, the balance sheet is in cash, 100 over million, 165 million cash, which is fabulous. So this is the reason why I think this company is worth to take a look at because they have long track record since 1984. They've gone through so many crises. The company chairman, Mr. Choi, is age 71. This is wrong. He's not the president. He's the past president of the Muar Furniture Association. So in Muar Furniture Association itself, in Johor, they probably are the big brothers. There's a succession plan which the nephew will take over. Is only 54 years old, which have another 20 more years to go. 10 years profitability. Compare from the first year until the 10 years, the company grew by 21% CAGR, which is amazing. Undervalued based on XPE multiple of only 2.7. Superb. Largest by market capitalization as compared to peers. As I mentioned, if you are largest, you can withhold any shock from the market. Net cash position withhold long period of external shock. Appreciation in US is good to them. Conservative management style, if you can look at them, they don't grow so much. It's a good and bad thing. They don't grow so much, but they are growing. They also buy a piece of land. They invested in hard asset, which is a good thing. In 2018, they purchased 3 pieces of land for expansion. So there is a room for expansion if they want to when the demand picks up. Current yield fabulous. For me, I love yield, which is 8% yield is good for me with a consistent payout of 37 of its profit. So this is the reason why I want mainly also I want to get the yield of 8%. Will the dividend yield go down? Probably it will go down because this year's result might not be as good as previous year because of the COVID-19 pandemic, and we don't know how long it will stay like this. But this company is consistently paying out dividend, which I'm comfortable within 5.5 to 8% yield every single year, and hopefully because of this downtrend, I can get a bit of capital appreciation as well from this company. So compare. This is my evaluation of Lihan Industry. And I want to compare it against this company called WTK Holding. This company, if you look at it, is 133 million market capitalization. This company has been consistently going down, and it goes further down. So this company's trend, you can see the share price trend 1 year ago. It has been consistent going down, which means before the COVID-19, this company also not doing so well. It's also consistent going down. So this is a red alert sign to me because the company is consistent going down. Who is going to be sure that after the COVID-19 it will go up? It will go up again. No one knows. But based on the price trend, it doesn't look so good. I want to look at the company where the price goes up, and due to the COVID it comes down. Then everyone priced the company at a certain price, continue to go up uptrend, and suddenly it comes down because of COVID. Then these are the companies that will buy. If the companies continue to go down and it goes further down, these are the price doesn't show that the market loves the company. The price itself doesn't show that the market loves the company. Okay, you can see revenue all consistent. There's no general trend of increasing. So not a company that I want to invest in. The net income is losing 100 over million every single year. Okay, but this company actually has a lot of cash also. In fact, they are in a net cash position as well. You can see a net cash position. Net cash. Anyway, this figure is negative. Net cash to equity is negative, which means the company is in a net cash position, which means they have a net cash position. But I won't invest in this company. What's the point of having a company who have a lot of cash if every single year it is making 100 million losses? So this is not a company that I want, although their balance sheet is okay. So this is my evaluation of the company. Hope you like it, and I hope it will. If you want to add this in as your education and for entertainment purposes, review through this company and give you the confidence in investing. This is just I have no recommendation to buy or sell. As I mentioned, this is all based on my evaluation of this company, my personal evaluation of this company. It's not a recommendation to buy or sell. If you buy this company, it is your good judgment. If you buy and you lost money on this company, it is also your bad judgment. So you take responsibility on your investment. I wish you all the best in your investment. Thank you very much. Take care. Bye bye.
I hope you enjoyed the video, and I hope the video gives you a summary of on a higher level of how active investing looks like. How active investing actually use the concept of 5M to actually evaluate the companies, and further on we do a lot of deep analysis. Of course, in the particular video, I haven't gone through exactly how to value this company in a more precise manner, which I used a discounted cash flow method. And then we compare with the share price, the current trading share price, and to determine what is our margin of safety before we invest. But nevertheless, just on a high level basis on what is shown in the video, you will know that this company is actually trading at the discount at the time of the coronavirus. And I hope this video will help you in your investing journey. Please comment below and let us know whether you have gained anything or what are the insights that you have got from this particular video itself. Thank you very much, and please comment below, like our video and subscribe to our channel. I hope to give you more ideas and tips on investing so that you can gain confidence in investing. Thank you very much.